50-day moving average is the line in the sand for momentum traders. If it stays above it, the game stays on. When it falls below, well, everything changes. And right now, most all the world indices are near those 50-day moving average, that critical line right now. Now, at the moment, Gary Glover's report that's just dropped out, he's got 78% cash invested right now. So he's really holding back on what's invested. Question is, what happens when these indices fall under that they're tethering on right now? Gary, that's a question that you and I are contemplating on a daily basis. What does it look like now, and how important is that 50-day moving average?
Yeah, I wish I got 100% cash there maybe about 3 or 4 weeks ago and just stayed there. I would have been better off. Yeah, no, you've hit the nail on the head there, Chris. That is the most important chart here, I think, is that Nasdaq and trading above the 50 there. Because obviously, like if you're trading momentum names, which this is a momentum market, I mean, the Nasdaq's up 60% from that April low. So that's, we're literally 7 months or something, 6 7 months there out of that low, 60% up. That's a momentum move. So what we've sort of seen here with that sort of 50-day moving average, and that when the index starts running, it just doesn't sort of hold that level. And then oftentimes when it breaks below the 50, that's when you go through a bit of a corrective phase. We've had a few corrections there. We had a sort of modest correction in 22, one in 23. Saw a couple in 24, saw a deep one in 25. But this is probably the longest move here. So if you look at that next chart, the daily there, you see that 50-day moving average, this, I think it might be the fourth chart there, sorry. This move here, the Nasdaq there, has been probably the longest move here, basically staying strong and firm and being above the 50 there. So that's probably the longest move here we've seen for quite a while. Obviously getting extended there, but yeah, so notice that we came back and tagged that 50 there in the last few days, but we did kind of reverse off the 50. So yeah, it sounds funny. We kind of expect it to sort of try and bounce off there initially. But I think if you're going to break through it, my view is you sort of come back, you'll hit it, bounce off it, and maybe the next touch through will come through. So just whether we get a lower high here or a marginal new high and roll off there, I'm not so sure here. On those sort of weekly, monthly charts on the Nasdaq and S&P, we do have some ranges just slightly above here, so could go up and tag those slightly, potentially sort of hot. I was just looking at some of the longer ranges stuff on the weeklies and monthlies there. But yeah, there was a little bit of selling. There was 3 distribution days there last week, Chris. I think there was sort of 3 down days with some pretty heavier volume last week. So there was some more aggressive selling than we've seen. Not even one distribution day the previous week. So we're starting to see signs there of sort of weakness. So we got all the breadth issues. We've sort of got all the classic leaders doing all the heavy lifting at the end. We've got the concentration there. We've sort of got index concentration there, as obviously the weighting is the highest ever. So got all the markers there. Just basically the price action sort of really needs to sort of break. But I think that Nasdaq breaking through the 50-day moving average, that's for me probably that's the final nail in the coffin. Now, if we break that, that's where I think the market's going to be at risk there. Because I think that's from a momentum point of view. You're going to see, like, a lot of people will exit those momentum stocks once they break 50. We sort of know that in States. And then once, if the Nasdaq gets below the 50 as well, that's usually a sort of, a lot of people are mandated to go to a lighter weighting and stuff there. So I know, like, some of the IBD guys, they like to be, being above the 21 day is kind of like green light. Being below the 20 is sort of red light. So they're sort of heavier or lighter. For the 50, closing below the 50 is like, that's a real negative sign there normally for a lot of those sort of portfolio managers. They're particularly trading Nasdaq oriented stock here. So I think if we see a close below that 50, that's going to be the real thing to watch here. So, but yeah, we had a bit of a bounce there. Just what sort of bounce whether we get a dull bounce or whether we get a new high here. But still feel like we're in the we're in the last innings here. It's just sort of how this sort of sets up here in the next sort of few days or the next week here or so.
Well, that's a critical component, that 50-day moving average that you're talking about, and it could unravel sort of a leverage effect or an EZF type flow on effect where it just becomes a cascading issue, which can lead to these sort of just gaining momentum to the downside with almost no end in sight, which can happen and has happened many times before. So when you're looking through those charts, the Nasdaq, the S&P 500, we do have a little bit of a different setup on the ASX, and well, no, you're not the biggest fan of Head and Shoulders, but you are noticing it could be sort of a fold back technique happening here with the Head and Shoulders.
Yeah.
What are the characteristic differences of the Aussie at the moment?
Well, I just noticed on that daily chart there, the XJA was sort of bouncing off that sort of 87.30 level there. So it had a couple of touches there previously. When it sort of came down, it hit that level and had a pretty decent bounce that Thursday. I think I had one day up, had to come back down again near it, and then inside day up, and we're sort of kicked up here. So just looks like we might have a little bit of a bounce there. But if you look at that sort of, we do have that false break top there. And there was some sort of reasonable sort of selling and some stocks, and we're seeing like a lot of those leaders are tipped over here. It's like if you look at those 3 or 4 or 5 accelerating trend lines, and particularly if you look at some of the faster moving stocks there. I mean, you've seen Wesfarmers, I think JB Hi-Fi was seeing like a lot of even the momentum stocks as well. They're all sort of breaking down here. All the defense stocks have all broken down here. Gold's hanging on there. Gold did have that sort of 12% sort of break, and then it has sort of bounced up here. Whether that's a lower high or a recovery there, still work that out. But I still think you're sort of still that sort of topping volatile option as well, which is probably the bigger here, because we sort of know when we're seeing this loose activity, that's sort of more topping action. So yeah, it just looks interesting here. I think if we, the our index looks like it might sort of set up this sort of kind of right shoulder here. So it'll just be interesting to sort of see how this trades here in the next week or two.
Well, if we move into the companies that you're looking at, because if we do see pressure, we see a lot of money flood out of markets, but some people still need to be invested, and that's why they shuffle their allocations into more defensive names and those that are possibly building a base. You've been guiding us through the base foundations for some time and highlighting the aspects that we need to look at. I will call out that if you go back to those previous down periods, Gary was talking about these similar sort of setups and traded them exceptionally well. So he's got a lot of experience in doing this, and we do listen to these setups, and I've traded some of them really well using a lot of Gary's insights. So Helius 0, 1, 2, 3. I really like this one. I've come to love this formation that you introduced me to. What would you like to see from Helius down here, particularly in the context of what the overall market is doing?
Yeah, so we know that when growth does start to break down, we'll often see a sort of switch out of that high growth into sort of safer, what they call defensives, and definitely healthcare is one of those sectors there. So I've noticed that in Australia and also in the US sectors that we are seeing some of the healthcare names start to show some relative strength, and and obviously some of those energy names are still sort of showing strength as well. So it's kind of a couple of sectors there. The staples obviously is the other area, so we've already sort of seen a bit of a bounce from Woolworths. But yeah, definitely the healthcare looks pretty interesting to me. This one's got a nice little base here, had that exhaustion, sort of pulled back, made a second high low, sort of tightened up here as well. So got a little bit of VCP in there, broken a swing high. Last thing on the chart is it's come back, very light volume, and just sat on top of that previous high. So leaves it in a pretty good position here. Just from the daily there, sort of set up there. So yeah, sometimes these bases take a little while to set up. But yeah, we do have our sort of third high low in place. So probably got a fourth high low there now. Yeah, just not seeing too much selling on the pullbacks there, which is sort of constructive, and probably seeing better volume on those up days as well. So yeah, overall looks pretty constructive. And it is, we know that's a sector which, if growth does start breaking down, this is a sector which does start to emerge here. So this is sort of the sector we probably should be looking at, in my opinion. So yeah, this looks quite good.
And Coronado Resources, which was Coronado Coal, down in that formation has rounded out, edged out a bit of a bottom. So we've seen this kind of movement before, and this one seems to have been done at a much higher volume as you've highlighted here. So we've sort of rounded out a bottom out of a 0, maybe a 1 high low, I'm not too sure. But the critical part here is that we're coming back towards this 50-day moving average that you're talking about. And how important is this congestion component right here?
Yeah, look, there's a lot of overhead there. That's the big negative. But the positive is we're seeing all that sort of volume coming in here recently. So it does look like there's sort of accumulation there. And we are sort of starting to see some of those energy stocks and the coal names be pretty firm. This was actually looking quite good yesterday. I think it was sort of at the top end of that sort of band. But there was, it's interesting. They did sort of give some reporting there, which was viewed pretty well in Australia, and then the same similar reporting to the US, and the share price has actually been dumped today. So it's actually probably come back down to the bottom of this range here. So I don't know if it's actually broken through the bottom or not, but has come back here. It is a little bit loose. I did see, it's still hot. It's still running a little bit of a loss there, Chris. It's got a little bit of debt there, I think. So that's there's definitely sort of some risk there. A bit riskier with the sort of smaller stocks under 50. Normally sort of don't trade those there. But yeah, in a sector that's sort of warming up there, just be interesting to see what happens today. If it doesn't sort of recover today, I probably would avoid this one. But yeah, I thought it was looking pretty interesting there. Just needs to sort of hold and recover here. That's all.
That's good insight to know how to look for the charts that are possibly forming bases in this kind of market, because we have had those that have already fallen over, been under the 50-day for some time, and the leaders that are still kind of holding on and grasping at straws to stay up there. Lease is another one that has been under the 50 for some time, toyed with getting over it a few times, as I'm highlighting here, and then it seems to have really tightened up. So you say losers for losers, tightest for winners. We're getting tight here. We are under the 50-day moving average. We are at the bottom right-hand side of the chart. We are in the bottom half of the chart. We are not in a momentum leader, but this is from your studies. Is this kind of the formation that momentum leaders have and can show before breakout?
Yeah, it's probably more of a Bulkowski sort of setup there. And yeah, the beauty of the sort of rectangle sort of setup is it's kind of got one of the lowest failure rates actually of most of the technical patterns. So, but yeah, you do need to wait obviously for the break out of it there. But I have noticed actually some stocks that have been trending down have sort of based here, like this, popped out and run to the height of the rectangle and then turn back down later on. So you can still sort of get these sort of bullish short-term setups in a downward trend as well. So I think Ramsey did something recently there where it was in that range, nice and tight, broke out, ran, $5 or $6, and then now it's gone back and retested the low. But these sort of rectangle formations there, that just they can be a sort of basing pattern. It's not classic sort of how you'd sort of get a normal low in place there, but yeah, just definitely seeing some signs of basing there. It's not my preferred sector, but Lease has been, and it has the last couple of reports actually have been much better than in the prior period. So yeah, management, yeah, definitely got this. Potentially moving in the right direction. It's just not a sector there that that I love in the current climate. Yeah,
as we're staying with that sector, you've also got Fletcher building in that space, and it's also got that rectangle formation, and it's selling it for many months. So July through to August, it seems to have been edging up and holding sort of higher lows and a tight congestion here with diminished volume and lower volatility than the previous 6 months. Still the same criteria. So
yeah, exactly right. Yeah, I actually thought this one would have broken out quite a while ago. Actually, it was thought that all those rate cuts in New Zealand there would have given the economy a little bit of a boost there, and would have been a positive for particularly housing there, having 5 or 6 rate cuts there. But New Zealand economy has been slow to recover here. Just starting to see a few little green shoots. Few companies are sort of reporting slightly better, but it seems like it's taken a long time there to sort of see any green shoots in NZ. But yeah, potentially this is sort of one that looks interesting there. If it can break out of that that range there, and we've been there for a while. That's the beauty there. That's quite a large base, Chris. So I think Stan Weinstein even talks about this, that like the longer the base, the bigger the move they can follow. So you can get some pretty decent moves after these really long-standing bases here. So that's probably the most interesting thing for me, is that that's like almost like an 18-month base. So, which often means you can trend for the next 18 months after that, after you come out. So, so maybe a little fallback technique there, Chris, how we've traded into that. Maybe we come out of that as well. But yeah, we definitely want to be coming out the other side first before we look at that. But yeah, pretty interesting, this one.
And we've got Viva Energy. So you've talked about the benefits of energy in inflation cycles before. I'm really liking to see this 0, 1, 2, 3. If you haven't come across this, we'll put a link in the description below of Gary's detail of this setup, because it's a beautiful setup this time of rotation in markets. What do you see in Viva, VEA?
Yeah, it looks obviously in that sort of energy sector there. It's a little bit different, this one here. I mean, it does have its Geelong sort of processing there, but it is really sort of more the retail as well here. But yeah, the stock's pulled back there. It's kind of held that 61.8. I prefer them to sort of see them stay in the top half, but the big caps, sometimes I'll come back here. But I do like the fact that we've had that nice sort of tightening, kind of descending wedge there. And now we've sort of had a bit of a base, but got a few higher lows building. And the thing for me, I just wanted to really see it come through that 50 there, which I think today, Chris, it has broken above the 50. So yeah, just starting to show the first signs of maybe coming up. Now, just noticed a few other stocks there. I think might have been Sims, SGM there recently, sort of did sort of something. Took a few, couple of weeks there to sort of build and come out of it, but then once it sort of broke the 50, it did get going. So hopefully it'll follow in the same footsteps there, but I thought that looks pretty constructive.
Now, one that a lot of portfolio holders ask about is CSL. It was a darling, and now it's rolled over. Took some time to sort of make its way down, and then it's really given up a lot recently, whether that's out of favor from injections and the US government, whatever that might be. It's taken some hard medicine itself to where it's today.
Yeah, it's had two big hits there. It had that first hit, then it had a bit of a recovery, but then it's got another hit, gone back to back. So, it's been hit pretty hard here now. Sort of come back to a definitely kind of lowest PE for maybe 2 decades for CSL. But I just went and had a look at the longer term chart there. So I went back and looked at the 2003 was the last really big low for that. That's kind of after that after the tech boom there, we had that sort of 2000 to 2002. I think 2003 March was the low for the Aussie market, late 2002 for the US market there. But that was a pretty deep low there for CSL. And, so since then we've sort of gone up to some high levels. We'll pull back here. So that range there, which is 22-year range, the 173 was about 50, was 50% of that range there, which I've sort of got marked there. So it's interesting. We're sort of we've come back to the big 50% range on a 20+ year range.
That's cool.
Yeah, so it's just definitely interesting level to sort of see. So it'd be interesting to sort of see what happens here. I'm definitely watching this one for maybe signs of like a 0, 1, 2, 3 or some sort of BCP or just a tightening pattern there. But yeah, this definitely looking pretty interesting to me. Just had a couple of big hits there, so might take a little while. And I think when ResMed got hit pretty hard there, I sort of did buy that sort of early there, and then it went through probably a month or two of sort of building before it got going here. So maybe try and be a little patient there this time, and rather than trying to nail the level, wait for a sort of a base here or something set up. Yeah, but it does look pretty good. And again, it's the right sector to be looking at this sort of timing. So just may need to build a bit more here, but this looks pretty constructive as well.
Now we move into the faster paced companies that are getting to the top, the momentum leaders, and this is something you've really lent into and expanded your knowledge and shared a lot of that knowledge with us throughout the model books and the like. Catapult is actually one that you've studied in the model books. We'll put a link to that below as well, because it's really worth studying this whole trend and this whole movement, how best to capture it. That's how the best traders improve their skills. So why wouldn't that work for us as well? What are we learning on this catapult chart? Sorry, we've got a ticker up here, New Bell, but it's catapult that we're looking at, I should say.
Yeah, CHC. Sorry.
CAT. CAT. But we've also done that in the model book.
Yeah, I mean, it's two things there. I mean, like we know when these momentum, if anyone who's sort of followed Minervini and IBD, sort of William O'Neill's work, we sort of know when these market leading stocks, the stocks that have the sort of the 2, 3, 500% sort of gains there, those market leading momentum leaders, when they're finished, we know the 58 rule will sort of kick in. So we know sort of 80% of those leaders will have at least a 50% drawdown. And 50% can actually have like a 70 to 80% drawdown in the market there. So we know those leadership sort of stocks there, because they're the ones that the market gets locks into and drives them up. And, they get, overvalued like every other market, and they get undervalued as well. But we just know that those sort of stocks, once they sort of start to get parabolic, and McLaren talked about this sort of 3 ascending trend lines there. In this case here, I think we've got probably 1, 2, 3, 4, 5 accelerating trend lines, so even better. But we know that once they're done, they generally come back to where that last acceleration sort of started there, which is around $3. So that's pretty hefty for CAT. I mean, I think the 50-80 rule, so just having a 50% decline in price is around 385, which is kind of just below that high there from early 2025. That's probably a safer level to sort of bet on that. But saying that, there's not many that I haven't seen come back to that where the last drive started on these sort of what they call these sort of vertical trends, or what McLaren sort of referred to as a blow off type of trend here. So I just still haven't seen any that haven't come back to that start there. So sometimes they'll come back pretty aggressively, and then they might have a bounce, and then they eventually come back to that level. But I haven't seen not one sort of come back there. So that's a bit negative for Catapult as well. So it was interesting. I saw another stock there this morning, which is in kind of a new name in the sort of similar segment, but in wearables and also robotics as well. But the code eludes me as we're talking. But very small. But at some point, some competition might come along, and obviously these things get overheated, and some selling comes in. So and then you get a correction in the market, and it pulls them back here. But we're definitely seeing that stock potentially tip over here, which is a bit of a negative there. So you definitely got to be careful with some of these growth names. We're seeing quite a few of them have come off pretty hard. Even some like, I think we still had a chart there at Neuro Pharmaceuticals that had a 50% pullback. We've seen stocks like, I think, APE Eagers, JB Hi-Fi. I mean, JB Hi-Fi has already come back half of what we were talking about, that correction, which seemed pretty big at the time, but it's already halfway there in a couple of weeks. So that's the thing. Sometimes when they peel off here, they can come up pretty hard here. We're seeing all those defense stocks too, Chris, Drone Shield, EOS, ELS, OSB, they've all come back quite a bit as well. So they're already off about 30, 40%, most of those stocks there. So we just know these leadership stocks there, they eventually, when they crack, they'll have those sort of larger corrections there. So, and usually when you get one or two of quite a few of the leading names, group names, they'll often, growth will crack down together. That's why it's amazing here where the Nasdaq is still hanging on here, whereas probably 2/3 of the leadership stocks are actually already breaking down, already showing weakness. So yeah,
it's defying gravity, but that can only happen for so long. And so there's another one in the chart, Life360. Also, this has been shown up in the model book, so anyone who's learning their charting eye will recognize this chart for helping build the foundations to identify the next market leaders, and we do that by studying the market leaders. We've got the ascending trend lines, these green ones, so marking low to low, so it captures that movement, but then it accelerates because to join the next lows, it needs a steeper line. And then to join the next lows, we're joining even more on this one, and it gets even steeper to where it is now. And it's toying where it's actually on the south side of this trend line, which may indicate that that trend has been broken. It still seems to be holding on somewhat. That's 360.
Yeah.
What are the critical points for us to understand now?
Yeah, I mean, like the last thing on that chart there is that, look, we don't have the fourth or fifth accelerating trend lines like some of them have done, but not all of them do that. A lot of them will just have the three accelerating trend lines. That third accelerating trend line does have multiple touches as well. So we've had the, 1, 2, 3, 4 touches, and now we've actually gone back for a retest of that line as well. So we've almost got 5 touches here. So if anything, that's actually getting even more
Validated.
or that, yeah. So, just breaking below that's not a bit. Again, we know those leading stocks when they do sort of eventually tip over, and that so far is the largest correction of that entire last week. So for 15 up to 55, that $40 move, that last correction there, 55 down to 45 there, that's that $10. That's larger than any correction so far in this whole rally. So that's kind of like what McLaren, referred to as an overbalancing of the trends. That's a bit of a negative. I know this is a very loved stock. It's probably been, I reckon it's probably it's like our NVIDIA, really 360. It's been probably one of our, strongest growth stocks here. I'm not sure how else.
I'll interject there. It's not that you dislike the 360. I know that you've traded it. You've traded it really well. So it's not like you've got something against it. You're just analyzing the chart here.
Yeah, it's been a great stock here. I wish I'd bought it more often and played it more often here because it's had it, yeah. I go back and look how many times I've traded it. It's a lot less than I should have. So, but no, look, it's at some point these leaderships they break down here. So it is vulnerable here, breaking that trend line. Most other growth stocks are tipping over here. So yeah, so really, I mean, the 50% rule there has that sort of coming back to the high 20s, which is kind of on top of that high there. So that's probably, I'd suggest that's where it should come back to. But yeah, sometimes, I mean, most times they come back to where the last acceleration trend started from. That's pretty deep here. So even I doubt whether they can get down there, but history has shown me that over time, like they invariably get down there. So that's not a good sign there. So just, be pretty cautious there with some of those leading growth names at the moment. They just, we're already seeing quite a few of them break down already. So, and the ones that are sort of holding on here are also showing some vulnerabilities as well. And that Catapult and 360, they've been really strong here. They've been, probably been in the top 5 here this year, both those stocks, in terms of their sort of bigger cap names that are in terms of performance and, just how market likability, I guess you might see, and be in a lot of small funds as well. So yeah.
So it's given a lot of shareholders a lot of gains, and they'd be very happy with it and probably somewhat wedded to it. But we can't marry the companies. We just need to date them. And when the date's over, we sell them out and they rotate out of the portfolio.
Yep.
And at the moment, you're currently sitting in a high component of cash. And any final words to leave us with on this week's report, Gary?
No, look, it's tricky out there. No doubt about it. Yeah, it's a tricky phase there. Just, I guess, I've just been said to my clients there, I've just built up the cash. I've tried to trim a lot of the growth of riskier sort of stocks, probably, and just a bit more defensive orientated here. The short trades aren't working yet. Well, a couple have, but not, a couple haven't. But yeah, I do expect, I think the market's got a fair, a decent decline in here. We know like next year's a midterm year, Chris, and normally sort of in that sort of June to October is typically where you find lows in those midterm years. And, I see a lot of people talking about this AI boom going on for, another 6 to 12, 18 months there. I just go and tell them to go and look at the, any long-term chart and just look at that all-year cycle and look at the October period in the midterm year. It's a magnet to draw the market down. I don't know why it is. It's a bit like the 10, 20, and 50-day moving average, which momentum traders use. They all work. No one really knows why, but they do. And it's like that 50-day moving average as well. That's, again, we don't know why that's so important on the 200-day for the longer term portfolios, but they work. They've worked over the test of time here. So, all I know is with high valuations there, with all the breadth and liquidity issues and the concentration going on there, and leaders breaking down here. I'll try and actually work on all those midterm year lows that we've highlighted there, I think might have been on the 6th of October. I had all the months that typically the lows come in. So there was a lot of October and Junes in those years. But I did at the time work out how long it took from the highs to lows. I thought it was sort of somewhere between sort of 5 to 9 months was the the most consistent. There was a few shorter ones, might have been 3 or 4, and maybe 11 or 18 months there, but most of them were sort of in that sort of shorter time period there. So probably 6 to 9 months at least there. So we're in that kind of window now where we've got to be pretty cautious.
For those who want to understand how to be cautious and how to identify market leaders in the next rotation when they're looking for the next setup, we've created a whole playlist, The Charting Eye, where you can work through these whole marked up charts to really imprint that in the back of the brain, which is what Gary's spent years doing. Mark Navini's done it. Jesse Livermore's done it. William O'Neill, they've all done it. This is where the great traders, these are the reps that they consistently do to improve their trading. And we've put a link there to that playlist. And thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.